Thank you for joining us today. My name is Anjali Garg, and I'm a climate finance specialist with IFC, the International Finance Corporation, and also the program operations lead from IFC for the Alliance for Green Commercial Bank, the initiative that we have. This webinar has been jointly organized by the Alliance and HSBC. The Alliance is a global initiative that brings together financial institutions, research institutions, and innovative technology providers to develop a green community in emerging markets to collectively finance the infrastructure and business solutions needed to urgently address climate and environmental risk. This alliance was launched in November of 2020 by the IFC and its first regional anchor, the HKMA. The alliance is supported by the China World Bank Group Partnership Facility and also the World Bank Group SDG Partnership Fund. You're invited to visit the Alliance website for more information, and also we encourage you to register online to receive regular updates about the Alliance activities, including all of our upcoming events. The website details are being shared in the chat box for your reference on the site. This event will be recorded and will be shared in the public domain later. Further to the event, you will be asked to complete a participant survey. Your suggestion will be highly valuable for us to plan the future events of the Alliance. So again, we request you to please submit and complete the participant survey. With this, I welcome you once again to the webinar, and I hand over to Louis Gam from HSBC to take the webinar forward. Thank you.
Thank you, Anjali. Good afternoon, all. My name is Liu Yinggang. I'm the head of Sustainable Bond of HSBC APAC. As Anjali mentioned, I think climate change, it is a hot topic nowadays in capital market because it requires a substantial amount of funding. We believe that this should be contributed from both the private and public sectors. During this process, we expect banks like us to contribute to the sustainable finance journey as well as the investment agenda via a couple of angles. For example, responsible lending, sustainable product innovation, active regulatory dialogues, and many more. In today's webinar, we will explore this topic with our industrial experts. Now, please allow me to introduce our panelists today. They are Mr. Jonathan Zhu, Head of Global Banking Sustainability for Asia Pacific HSBC. Jonathan started his banking career more than 13 years ago in London and has been working in a wide range of markets, including Latin America and Middle East, before moving to Hong Kong in 1997. He has witnessed firsthand the rapid growth of Asia. Over the last 8 years, Jonathan has led HSBC's effort in sustainable finance, assisting clients in development of transition strategy, as well as issuing sustainable finance products. Jonathan is a member of the Executive Committee of the Hong Kong Green Finance Association. It is also a founding chair of the APLMA Green and Sustainable Loan Committee. Welcome to join us, Jonathan. Our second speaker is Mr. Sethian Leewarin, Chief Sustainability Officer at CBX from Thailand. Prior to joining SCBX as Chief Sustainability Officer on the 1st of August 2022, Sethian was a Senior Executive Vice President, Chief Strategy Officer for SCB for 3 years, as well as the CEO of SCB Life Assurance for 2 years. He has accumulated extensive background in finance and banking as Head of Business Strategy and Development at TISCO Financial Group, and has been in the hire purchase business for more than 22 years. He has also worked in other leading firms, including a senior position in charge of securities business at the Ocean Securities and Finance. Thank you for joining us, Sethian, today. Our last speaker is Mr. Eve Lewis Epstom, former SEC Commissioner in the Philippines and consultant for the World Bank in connection with the Sustainable Banking and Finance Network and the Joint Capital Market Program. He is also an advisor to the chair of the ASEAN Capital Market Forum. Eve is a very strong sustainable finance advocate as the co-chair of ACMF Sustainable Finance Working Group from November 2016 to May 2022. Eve played a key role in the development of the ASEAN Green Social Sustainability Bond Standards. Eve also participates in the development of the roadmap of ASEAN Sustainable Capital Market 2020 and was part of the ASEAN Sustainable Finance Taxonomy Project, which result in the creation of the ASEAN Taxonomy Board and the issuance of the ASEAN Taxonomy for Sustainable Finance in 2021. Great to have you on the panel, Ed, and great to have Jonathan and Sebastian as well. For our audience today, I can see that there are about 115 people joining us. Thank you so much for being interested in the sustainable finance topic, especially for banks. You may notice that our distinguished guests coming from different backgrounds. So if you have questions for them, please input your question into the Q&A box in your Zoom function, and our panelists will try to answer them at the end of the session. Now, I would like to give our panelists a couple of minutes to update us on what's happening in their organization, in their industry, or in their country in terms of the latest sustainable finance development. Jonathan, would you like to go first?
Lu-Ying, thank you very much, and also thank you very much to the IFC and HKMA for not only establishing this crucial alliance, but also inviting me to talk to you today. Perhaps just to sort of address your question, Lu-Ying, and set a bit of context here, it might be just worth thinking about sort of, what being a green bank really means. And there's sort of, in my view, sort of two parts of that: the vision of the future as to sort of what characteristics a bank that's truly green might have, and then the steps that a bank today would be taking to get there. And then perhaps I'll just add specifically to your question, sort of what is happening at the moment. But I think this sort of vision is really important to sort of understand the challenge and the objective. And I think if we do think about that future state that we're looking for in a sustainable world, the banks will all have being sustainable, preserving a balanced system, human activity being in balance with nature as part of their strategy, core to their purpose and brand and value. And as well, it will be fundamentally, sustainability considerations will be embedded in all of their decisions about sort of which clients they want to have on their books, and which transactions they will do and which transactions they won't do. It'll be core to the way banks communicate, to show that we are in balance, we are addressing, we are preserving, we are sustaining this balance between human action and the ecosystem that we depend upon. We'll be reporting many more metrics around how we impact to make sure that we can show and demonstrate that balance. We'll be communicating in a very different way, in a very complete way, about what we do and what we don't do. We'll be looking at the risks if we were to sort of move out of balance, how those risks we might capture them, identify them, assess them, and then of course manage them. And we'd be building, as well as we want to preserve this sort of balanced system and robust financial system, we'd be fully engaged in supporting and working with our regulators to make sure that regulations support the continuation of that process. So in a sense, that vision of the future that we're aiming for really sets, I think, the framework for what we need to be doing today. So it's about having policies around how we will fund and won't fund activities, particularly in sensitive sectors. It's about setting out how we want to engage with clients, to understand, as we sit at the beginning of this sort of transition process, how we expect, or how they are planning to transition, and why we're comfortable with their plans, and how we propose to support them. We'll be looking in the risk space, as we are today, critical areas, thinking of what is set out in the TCFD about scenario analysis. So we have scenario analysis that we're working on, driven by the regulators, but also an internal scenario analysis where we're looking at all of our clients and how they may perform through this difficult transition period, who will be the winners and losers. And that's live work that is going on today. Policies, again, we've many banks are now setting out publicly exactly how they're going to finance in sensitive sectors, and in terms of target setting to monitor their progress against these targets. Of course, we now have more and more banks sort of like us publishing their financed emissions targets as sort of part of dealing with metrics. So really setting out sort of pathways, the underlying science-based assessment as to sort of what are pathways that align to the overall temperature objectives, if we think about the climate component, making decisions about how those will be implemented. Will we be setting absolute emissions targets? Will they be intensity targets? And that may be decisions sector by sector. So those are the sort of things that people are now doing, the market is now adopting to drive towards this goal. And the other thing, of course, and the final point I would make, which doesn't appear in the vision, is about the labeled finance products, because in that vision of the future, there will be no need for green bonds and green loans because all activity will be sustainable. But today we do have these products because these products actually support our clients to communicate their strategies, and they also provide indicators as to how capital is being directed to support sustainable activities as opposed to unsustainable activities. And as we all know, those markets have grown very, very significantly. Last year, more than $1 trillion of sustainable bonds issued, and more than 700 billion of sustainable loans. So that, Lu Ying, really just a snapshot as to sort of green, what it means, and some of the things that we're doing and we're seeing happening right now.
Yeah, thank you, Jonathan. I think you definitely touch upon many angles that I think we will dive a little bit deeper into. But I think I fully agree with you. One aspect that you mentioned is that I'm the head of sustainable bonds. So now we see many sustainable bonds issued in the market, but going forward, we hope that they will not exist because all the capital market or the DCM would be sustainable. So we actually hope that they would come earlier, and then it also apply to other sustainable products that the banks are mentioning and managing as well. I think for Sethian, I think SCBX has been also doing many of the aspects as Jonathan mentioned, and I understand that you have also used quite some latest technology in order to scale up the sustainable finance market and development. So maybe Sethian, you would like to share with us some of your latest developments? Sethian, maybe you need to unmute yourself.
So, sorry. Thank you, Lu Ying. I think the question is what make a green bank. I think for SCB, as you may know that SCB Bank is the largest bank in Thailand and is the first bank in Thailand. We 115 years ago. So we transform ourselves so many times. Up to right now, last year, we just already transformed ourselves to be SCBX. So SCBX, what it means and what we do for the SCBX. I think would it quite clear to share some presentation to more understanding. Yeah, have you seen it? I'm not quite sure. I didn't see it. Sorry.
Yeah, we can see your slides on the screen, Sethian. Yeah.
Okay. So I think for the SCBX, it is quite unique from other banks. We have 4 pillars to focus on. One is the conventional banks. We just do the bank to be a better bank. And the second is the part of fintech. We try to do so many fintech by using a digital platforms. And the third one is the technology platform that we try to do. And we aim to be a tech company. The fourth pillar that we focus on right now is the climate tech. So I think we're quite unique from other banks. So we have a legacy like HSBC, but we are trying to do so many things that quite new for us as well. And this year, we just announced to the public to align the net zero, align to the Paris Agreement timeline. And that means that we have a commitment to do a lot of things in both bank and tech companies. And we need to become a net zero fintech within our own operation within 20 and 30s, and lending and investment scope 3 activity by the 20 and 50s. This is our commitment to the bank, to the publics. And what should we do? I think the two key strategy that we try to do is one is do no harm, and the second is do more good. I think it's quite easy to saying that doing no harm what is mean, and it's quite easy to saying that do more good. But for the do no harm side, what is mean? We have adopt a lot of things. We reduce so many business that impact to the GHG climate change, and we adopt the EP principles. And I think it's quite clear that this is our sincerely to saying that for the fossil fuels finance, we also think about how to reduce and how to use the EP principle to shape the way to go. And by the way, I think we also launched a lot of business, a lot of ESG products, such like a green bond, green loan, and other things as well. This is the in terms of the conventional banks. But in terms of tech, we think about do more good. The key term of do more good for us is we think about how to use the technologies and innovation to drive to make the world better, to make the process of doing things to be a green bank, to be a green companies. So we are thinking about a lot of things. If you see our chart, you will see that under the SCBX, we have a lot of subsidiaries. Most of it is not a banking business. Some is food delivery, such like Robinhood. So the way we think about to engage the people to do a green business, we think about if we use the such like Robinhood, we do the food delivery. How can we make the world better? We think about the EV platform. We use the motorcycle EV platform. We think the way to use the batteries, the way to use the renewable or recycle batteries, and we are quite new for this area as well. We think about EV platform. We try to invest a lot in this area to do the environment better. This is just an example to do in terminologies of do more good. This is two things that I think maybe and one more things I think we try to explore a lot of new business that should be make more such like the business that think about the how can use the some production in agriculture area to have a better solution, something like that. And we explore a lot of startup in this moment to do the kind of business. We don't think about we don't think ESG or green bank is a CSR. We think about business. We think how to embed all the process into the business and the way to run the green bank. This is SCBX. That's it.
Thank you, Stephen, for bringing us the latest view on how SBX has been supporting sustainable finance. I also particularly like your mentioning that I think the role for banks and in the journey would be from two angles. The first one would be do more good. The second one would be do no harm. So I think from the do more good is like we actively support sustainable finance product and project, and do no harm would be that we may try to engage the more hardware-based sector, more highly polluting client to transit to a cleaner future in a supportive as well as constructive way. I think this is actually one of the key questions that and one key challenge that face many of our our banking partners, some of them are joining us as an audience. We have now more than 200 of them. Maybe we can explore this little bit later. But for now, I think maybe let's pass the mic to Eve, who come from a more regulator and MDB backgrounds. We understand that regulators and MDBs always look at issues and solutions at an angle that which would be possibly maybe broader or higher than financial organization and other commercial corporate that we deal with every day. So if how would be your view on decarbonizing Asia, becoming asking your organization to becoming a more greener institution? Any updates and experience that you would like to share us?
Yeah, thank you very much, Lu Ying, and thank you once again to HKMA, IFC, and HSBC for inviting me to be part of this afternoon's panel discussion. So as Lu Ying actually mentioned in the introduction, I've been on the regulatory side of this discussion on promoting sustainable finance and green banking for a while now. And you can see actually that ASEAN has a comprehensive plan for promoting sustainable finance. And just to give you a bit of context as to why that might be, although the 10 countries of ASEAN continue to have robust growth, despite the challenges of the pandemic and the other challenges we are facing in the global economy today, all 10 countries number among the most vulnerable with respect to climate change. So the need to find ways to mitigate the negative impact of climate change and at the same time promote a sustainable growth path is at the core of the ASEAN's vision for continued development. And so it should come as no surprise that the ASEAN finance ministers and central bank governors have expressed their full commitment. They've had this commitment for some time, but in 2020, they expressed their full commitment to furthering a cohesive, sustainable finance agenda, cutting across banking, capital markets, and insurance areas, and with greater coordination among various ASEAN regulating bodies. So it's really a full push across the financial sector in order to help promote sustainable finance. And you can see this in examples. In the case of the capital markets, the ASEAN Capital Market Forum, of which I used to be a member, now I am advisor to the chair of the Capital Market Forum, which is the grouping of the capital market regulators across the 10 ASEAN countries. ACMF has issued the so-called ASEAN Suite of Green, Social, and Sustainability Bond Standards. And since the introduction of those standards in 2017 and 2018, we have had something like $26.5 billion worth of ASEAN labeled bonds issued in the region. That number continues to increase. And if we add to that number, not only the bonds that carry the ASEAN label, but are aligned with the ASEAN standards, we're talking about in the region of $30 to $35 billion already issued. On the banking side, the Senior Level Committee on Financial Integration has issued a report on the roles of ASEAN central banks in managing climate and environmental risks. So ASEAN banks, ASEAN central banks are now considering principles for promoting sustainable finance. And I think this would be of particular interest to the audience. There's also work being done by the Working Committee on Capital Market Development. And as Lu Ying mentioned earlier, last year, ASEAN launched version 1 of the ASEAN taxonomy on sustainable finance. What does this really mean when it comes to promoting green banking? I'm very happy to say that the regulatory vision of green banking is very much aligned with what Jonathan and Kun Sathian had mentioned earlier. So it's gratifying as a regulator to hear the commitment to embed sustainability in the business practice of a bank. As Kun Sathian said a while ago, we're not talking about CSR. We're not talking about something that's nice to have and that shows your work on the weekends helping to promote community. We're talking about embedding sustainable finance into the core strategies of the banking system. And part of that is linked to what both Jonathan and Satyan mentioned, it's also management of risk, and particularly for the banking regulators. One reason to promote awareness and adoption of green banking practices is to help our banks become aware and monitor their exposures to climate-related risks. And when we say climate-related risks, we're not just talking about the things that we already experience on a day-to-day level, exposure to very extreme weather events and such as floods or hurricanes or typhoons and other environmental events that may impact banking operations. Of course, we want the banks to be able to mitigate that, but we also want the banks to be aware that there is an ongoing transition to sustainability, and that transition will mean changes in the business strategies and the core business practices of their clients. That will mean changes in regulation, and that might impact the credit worthiness or the credit of many of their clients. So this is very much also a prudential concern. And I very much like the way Kun Satyan put it. You can really think of it in terms of do no harm, do not be a contributor to the negative impact of climate change. Be aware of the risk, mitigate against the risk, avoid being exposed to assets that may be stranded in the future due to technological or regulatory change. But at the same time, as Jonathan has also emphasized, do good, as Kun Satyan put it. We would like to invite the banks to consider financing or supporting this transition that we all have to undertake towards a more sustainable future. So it's about managing risk, and as you can imagine, for prudential regulators, risk management is very important. But it's also about banks looking at the opportunities to finance an orderly transition to a more sustainable future for all of us. And I'd like to leave it here for now and continue the discussion with the panel later. Thank you very much, Louie.
Thank you, Eve. I think you bring some new discussion and go into the party. So about climate risk and how banks would be able to manage their exposure to climate risk in a more proactive way. It is not only about the risk that we're talking about today, but also the risk that we're talking about in the future. So this would, I guess in the ASEAN context, this would not only be looking at the climate angle about reducing emission and then reducing the temperature increase, but also to ensure the living standard of the ASEAN community. For example, to ensure the affordability about energy price in all the background at the backdrop of decarbonization of our energy supply chain as well. So indeed there are much more than the banks can do, and then because of our extensive connection as a bank, we connect with regulators like yourself, we connect with banking clients in the capital market, we connect with the issuer and investor, we also connect with other market participants to make a very healthy ecosystem for our sustainable finance to develop further. So I think in this way, in this angle, banks have an even bigger role to play, especially in connecting all the views and form a consensus, hoping to drive the sustainable finance journey further. I think now, thank you so much for setting the scenes. I think it is actually quite broad scenes as we expect. Maybe we would like to dive in some of the particular aspect that we just touched upon and then worth exploring. So for example, Satyan, I think you mentioned do no harm and do more good. You also mentioning that financial organizations and companies are actually facing quite a lot of challenge in the decarbonization journey. Then apart from having the subject matter experts, like everybody on the screen here and our audience, then we know that we have a heavy duty on driving the market development. But what other fundamental element would be necessary for a successful journey in your opinion?
Yeah, thank you, Lugi. I think when I when I do the sustainability roles, I think so many people ask me, I come from the business side. I was the business driven before. So why I accept to do the sustainability roles? Is that the CSR role? Is that the role that make the company look good? But I laugh and I think that so many confused in this area, and so many BUs in banks don't understand what ESG means or what sustainability means. Not only bank, but our customers don't know anything about ESG. They do the business and think about profit in the first time, not think about do the world to be good or what else. So I think if you need to run the sustainability or ESG or even GHG emission to meet your target, I think the first thing, first of all, is tone from the top is quite important. Our management should have some belief in ESG, belief in the climate change issues, and quite serious to drive it. So I think my CEO is quite believe in this area. So he assigned me to run the business and think about how can we use the business or we drive the ESG embedded into the business. That's the key thing to make it successful journeys. And one more thing, if we go back to the banks, I have experience to adopt the EP principles. A lot of things make me very confused and make my colleague also very headache about is that can do it, is that can done, is that what is the definition of this, what is the definition of that, and they ask how can we accommodate for this, how can we use can avoid and can we do like this, like that, but they don't understand the principles. So the way to do the ESG or make it success, I think it should be have a systematic integration in the process. Such like when we adopt an EP, we should have a risk framework. The risk framework we should own by risks and to understand what can we do and what should we do. That should be very good things to run for the bank, especially for the bank. The third that I think it should be it is to build the ESG mindset among our staff and our client as well. I think this one, if we don't have a mindset of the ESG or concern of climate risk, we cannot go further. And this is not only us. I think our value chains, our supply chains also should be believed. And we try to do a lot of easy things such as the way to quantify the baseline for our customers and have some consultant team to talk with our customers. So it's not the CSR. This I emphasize this word. So we should do the business embed with the ESG and make the sustainability more valuable for all of us. That's my view.
I think I agree with you so much, Sethian, about a couple of key points that you mentioned. Senior management buy-in definitely is really important. I think many of the top guys and ladies on many of the organizations around the world now actually has already buying in the ESG views. They will support their organization to do business in a sustainable way. And then about embedding the ESG topic into business as well as build up the ESG mindset among our staff and clients. I think it can be quite a long-term journey. So I think when I first moved back from London to Hong Kong in order to develop the HSBC's APAC sustainable bond business 5 years ago. Together with Jonathan, we always joke about that we are the green voice, and then have been talking about green every day to everybody. Some people at that time may see us as crazy. But now I think as the market develop, as the bond market grow double the size every year, then I think more and more colleagues are actually would agree with the green development, would be able to apply this topic onto their everyday business. We exactly need this, right, Jonathan? Because we, no matter how many voices in my team and your team, we do need our frontline colleagues to be embedded the green thinking into their everyday business. We need to be selling this ESG idea to clients. It can be in different angle. Not everybody would consider a green bond. Not everybody would consider a green loan. However, ESG would need to be a DNA to be embedded in their business model before they can be assured that they would be a successful company going forward. Jonathan, we have anything to add from this aspect about embedding the thinkings into the banking operations? I guess that actually could be quite, your experience in this area could be quite useful for our audience, because I think many of our audience would be financial organizations from around APAC. They may be on an earlier journey about what we have seen and worked together with you a couple of years ago, and now they're experiencing. Maybe you'd like to share a couple of points?
Well, I completely agree with Kun Setuan and you, LG, that this is fundamentally got to be about people, because we are fundamentally a people industry. If we're going to drive change, we need change within our people. And it's not just, I think, about, you know, providing them with information to grow understanding of the challenge and the potential solutions. It's also about mobilizing them and enabling them within their part of the business to actually contribute to the change process and bringing forward solutions. So I think this sort of engagement, the sort of process of creating the awareness, but then importantly driving the engagement and the contributions are critical. And it is, I'm sure those years ago, I mean, they might have thought I was crazy. I don't think anyone's ever thought you were crazy, Liu Ying, but there was a lot of advocacy involved in those sort of some of those early days around, you know, think about the risks, think about what's going to happen, and also think about the opportunity. And we've moved on from that, which is the good thing, not least in part because we've had, you know, really good regulators now really come strongly to the party. So there's the sort of the carrots and the incentives and the internal persuasion and nudging, but now we've got the regulators with their sticks and other forms of incentives. So we've got much more alignment now around the need to address this challenge. So it's much more now about focusing, okay, so how do we do it? We're no longer asking the questions, is climate, you know, a real risk? Do we need to change? I mean, all those are now given. And it's really now about how, and it's interesting to see a couple of sort of questions coming in on the chat that very much go to that say, well, okay, so how do you incentivize as a banker, how do you incentivize clients? As Kun Setuan said, there's offerings, and in your offerings and your own operations, you need to address the emissions, the sort of last mile delivery solutions and so forth through e-vehicles, but also incentivization through financing. And that's an area obviously that, again, you and I have worked a lot on, Liu Ying, around the sort of the incentivized loan products, the sustainability linked products, where you create a set of incentives for your client if they perform against, you know, ambitious targets set for relevant and measurable metrics and KPIs, that you can create an incentive. And generally now, you know, even across those, so that's an incentive, and improved a better financial outcome for an issuer who has, or borrower who has, better sustainability performance. But also within the use of proceeds products, we have seen consistently over the years, less easy to see it in the very volatile market circumstance we've got now, but I think consistently seeing the bid from the buy side for the green and sustainable offerings, which are the corporates who have got a green and sustainable strategy, is stronger than for those who aren't communicating that. And we see that as, you know, through higher subscription levels. So the market is responding to put more capital to sustainable activities. So we as bankers, it's in a sense, it's our responsibility to make our borrowing and capital raising clients aware of that and help them to position for that, build their transition strategies, communicate those to the market, because we are going to be quickly moving to a point where if you don't have a sustainability strategy or you're not communicating it clearly, it's going to become very, very difficult to get access to capital. And it's certainly going to become much more expensive to get access to capital. So I think this is where sort of we are now and recognizing in the engagement with clients to understand what they're doing and help them communicate that to the market when they go to raise funding, whether it's coming off our own balance sheets as sort of individual banks, we've got to go and pitch in a sense to our internal approval processes, or whether we're taking to the market and helping them present their stories to investors. And it's increasingly happening across the capital stack. It's not just loans and bonds. This is now the same, whether you're putting together trade facilities, all of that sort of financial product and service, as well as the advisory component, where banks can now support, and it's critical that they can support their clients and deliver a sort of a win-win for both the bank and the client.
Yeah, thank you, Jonathan. I think you touch upon government and policymaker support. That's definitely a very strong driver in sustainable finance market development. Today, our webinar is actually under the strong support of HKMA and IFC, a live example of how this big organization would like to use their strengths and connection in order to develop the market. If from your point, and how do you think that what would make, in your opinion, what would be the most effective support that the policymaker and government could do to support the agenda?
Yeah, thank you very much, Lu Ying. But before I give you some thoughts on how what role government and regulators might play in this transition journey to a more sustainable future, I'd like to acknowledge that when it comes to green finance and sustainable financing, much of this was actually led by the private sector. Government, was unsure for a long time about how to approach this. So a lot of this was really started by the private sector. I think IFC definitely, with its work in the International Capital Markets Association, banks like HSBC that are early adopters of green finance help move this along. But what would be the role of government ideally? And I would say the government, could provide clear guidance as much as possible in an ideal setting, provide clear guidance as to what exactly are the decarbonization objectives. What are we trying to achieve? What is this future that Jonathan's talking about? What are the decarbonization pathways? We know that we're not going to just flick a switch and then tomorrow suddenly we will lower our greenhouse gas emissions. This will be a process. It will take the form of a pathway. It will be a journey. What is the journey? What would be the prescribed journey? Government could help identify that. And then idea government, again, while it's useful to have the private sector championing many aspects of sustainable finance, it's nice to have an official regulatory authority, identify what are the key metrics. What are the thresholds? What are the key data points that banks and other corporates should be looking at to see whether or not they are aligned with the transition pathway and with the goal of a low carbon future? Now, this is ideally the guidance that government should provide. And in ASEAN and Asia Pacific in general, you actually have government identifying their nationally determined contributions under the Paris Agreement, identifying how they will support a below 2 degree or better a 1.5 degree future, how they will contribute to that. You have several governments coming up with sustainable development roadmaps, trying to signal to the population how we're going to get there, how they're going to achieve their NDCs. And as an example of trying to provide guidance on how to measure progress along that transition pathway, you have multiple attempts in different jurisdictions to come up with a classification system or a taxonomy, if you will. ASEAN is attempting that at this time as well. So I think Kun Sayan mentioned a while ago, part of the reaction from the front line is, what do you mean green opportunities? What would be harmful? What would be risky? What would be aligned with a sustainable future? How do you define these things? And so governments are working along these lines to provide this kind of guidance. But I want to emphasize that government, it's not the need is too urgent and the challenges are too complex for government to just assume this role by itself. Again, this is very much a public-private partnership. The input coming from the private sector, coming from the market, on its appetite to invest in the sector, its concerns on the transition pathway is very much appreciated. And Jonathan knows this very well because ASEAN has tapped HSBC along with other key players in the financial markets as a part of an advisory panel to see, to check the weather or check the temperature of the water, if you will, if we are moving in the right direction. And if we are responding to the needs of the private sector. So government has a very key role to provide an enabling environment for sustainable finance, but we very much want and need to have the private sector as a partner. And this is something that we want to listen to the regulators and have them participate and contribute as well.
Lu Ying, if I might just jump in very quickly to reinforce F's point there. I mean, we've talked a lot about what banks do sort of individually, sort of within their own shops and engaging with clients. But I think banks working together, banks working with regulators, the whole sort of ecosystem of the financial sector, sharing experiences, contributing to product development and robust product development to drive the markets is in the benefit of all, because in the same way we have these sort of negative externalities, which are, at the source of many of the climate problems, we can, by all of those things that F talks about there, we want to create these positive externalities whereby sharing and working together and cooperating, we're actually addressing risks not only from across the market, but also within our own institutions. So industry associations working with regulatory and working with public sector groups and organizations that cover across markets like the IFC are critically important components, in my opinion, to the sort of the recipe for success here.
Yeah, thank you for sharing, Jonathan. I think if touch on the point about government has a great role to play in defining the decarbonization pathway, defining the rule book for their company to follow. I think this actually proved to be quite difficult in Asia Pacific, especially because we are a very unique region with very different level of GDP, per capita, political regime, and climate landscape. I think the next question is actually about, well, you have been navigating working in the APAC for a long time, and then you have been helping HSBC's APAC platform in order to offer better sustainable finance product to a diverse range of issuers. So will you have any experience to share with our audience on how best to do that? I think you touched upon this about client engagement, in empowering the front line. Jonathan, is there anything maybe further for you to add, especially in terms of some of our audience are also managing cross-regional, cross-country portfolio where they may face quite different, for example, green definition and taxonomy.
Yeah, well, I mean, Asia is a complex region. I mean, it's large. I think we've got half the world's population sit in Asia. We've got some, very advanced sort of and wealthy economies, and we've got some economies that are still much earlier in their sort of development stage and emerging, and they're all facing very different and specific challenges. I mean, there's some common themes, I think, that sort of growth for the region, and also the fact that across many of our markets, including the higher income markets, we've got a high proportion of sort of high carbon energy sources in our electric power generation mix. So we've got to sort of balance that sort of decarbonization process with growth. So that's a huge challenge. And as you say, LG, when you come to then try and sort of align those to a global decarbonisation pathway, it becomes quite complex, because in a sense, or I think my view, our view as an institution is, you need to have reference pathways, because you need to show what you're planning to do against some reference point. And using the sort of the robust and credible scenarios, which are true global scenarios, is a very important way to do that and to benchmark what you're doing. But then you have to apply the judgment as to then how you within your business you're going to accommodate some clients, for example, who may be transitioning much faster and others that are much slower. And it's the somewhat statement of the obvious, it's the combination of the two that are going to sort of dictate how your overall portfolio moves. So I think you're right, when it gets very granular, that analysis is very complex in across Asia generally. And of course, bankers are in the front line of that. Well, how do I assess? Because this client, they doesn't perhaps have the green power opportunities. It doesn't perhaps, it's not operating in a market, or it's operating in a market where there perhaps isn't the funding available to invest in some of the enabling infrastructure for transition. So therefore, but how much of a slower pathway is reasonable? How much can I tolerate within my portfolio? Because if you're managing an individual client, you need to be communicating with your center to assess, well, do we have tolerance for this because we have other activities that are accelerating the transition in different areas. And this is where I think, as F is talking about, taxonomies can be very helpful to guide on that as to what works and what doesn't. So I think you're right, Louis. Yes, the complexities of doing business and banking across Asia are enormous, but the rewards for getting this right are also enormous, because Asia, emerging markets are the markets that haven't yet had their opportunity. And if we don't deal with climate change will extinguish those opportunities. And that's what I think is the real benefit of getting this right. In if we think of an energy system that's where we've got zero fuel costs, renewable energy with diversified and distributed generation. Just think of the benefits of that, not just from a cost perspective, but the avoidance of what we're seeing today of all of our cost of living sitting here in Asia being impacted by a war in Europe that's miles away, but we're connected to it because we've got this sort of global commodity price that influences our energy costs. So if we can take control of that and maximize using our renewable local sources, we mitigate that risk and we benefit from that. It's a huge financial uplift if we can avoid those costs. And that's just one example of some of the benefits of addressing the challenge.
Yeah, definitely. I think the effort, we will need a lot of effort, but I think the reward is also huge. Yeah, definitely agree. Thank you so much for the sharing of our great panelists. We have actually some very interesting questions coming live on our Q&A panel. So maybe let's try to use the remaining couple of minutes to try to address them. The first one, it is about, in order to support and promote green finance, does bank offer more preferable financing cost or interest rate to corporate clients who use the proceeds to invest in green projects? So I guess it's a general question about whether sustainable finance funding would provide more attractive funding level for our issuer clients in the banking environment. Sathian, would you like to give it the first go, or Jonathan, would you like to give it a attempt?
I will go to the second question. Is better. I will share some experience.
Yeah, I think, Louis, the first question I sort of answered earlier on when we talked about, how green gets bigger subscriptions, sustainability linked gives lower cost of funding to, high performers or issuers, borrowers who meet their sustainability targets. So perhaps, Satyan, you take the second question.
Okay.
Yeah, thank you, Jonathan. Yeah, I think we touched upon that. So I think different banks may have different practice on this aspect. But in the bond market, for example, it is where I come from, and then there are quite a lot of public data about that. Sustainable bond would be able to help you attract a wider investor base, and then it has a chance to help you to achieve some attractive funding level. And in banks, even though there are different level of different practice, but the support for sustainable finance would be beneficial to many of our customers, no matter whether they are from the different sectors or from some of the specific use of proceed. But however, I think the benefit would go beyond only financial, as Jonathan mentioned. It is about engaging a wider customer base and stakeholder, not only on the financial and economic benefit on top of that. And then the second question, I think Sassan, you would like to ask, thank you for volunteering. So it is about that, who are those corporate clients, whether it is a multinational or FI or it's SME, smaller participant, they are most interested in sustainable finance product and what type then they may have specific interest in.
Yeah, I think for the sustainable banking, the one who interested to do it is the one who make a lot of impact to the business, such like the energy business, transportation business, and so many power plants that quite do a lot of GHG emission to the. That's why we adopt the EP, and we found out that those of MNCs companies quite aware about this, and they are quite concerned about to do the way to get the finance. If you understand that bank is not the directly carbon emission emitters, we just provide finance to those industry. So I think those industry is quite concerned about what we try to do, and is quite maybe is indirect influence for them to do the good ways. So, and especially not only the MNCs companies, I think a lot of SME also think about how to do the green bank or sort of green business, such like waste to energy. They are thinking about how to do it and can do it in terms of sustainability or not, and what should their concerns. And we have a lot of business or a lot of industry that we try to engage them to understand more in terms of sustainability or ESG. That's my experience. That this is the early stage that we adopt EP, and we do a lot of ESG in the first early stage. That's my experience that to share.
I mean, very briefly, I completely agree with Khun Satyam, whether this sustainable finance movement is relevant for the small clients and the large clients. I mean, when you consider that, small clients will often be in the supply chain of large clients. So if you're working with your large client, you can incentivize through trade or supply chain finance schemes to recognize and reward for decarbonization right through the supply chain. Or if you're working with a smaller client who's in the supply chain of someone else and you help that client decarbonize, they become a much more attractive supplier. And in a world where we're quickly moving to carbon pricing, they'll be a much more cost competitive supplier through their decarbonization than their peer who may not have decarbonized. So there's real impact, I think, that banks can have through the whole chain.
Yep, thank you, Jonathan. I think we are coming up to an hour. So I think that there is actually one last question I really want to see whether it can give us some thoughts. Next question that has been submitted by the audience before the webinar. It is about that the sustainable finance market has been developing largely on a self-regulatory basis. For example, the ICMA GBP and APMA GLP as well, for example. Then do you think this is effective? Or do you think that going forward, government and regulation would take over to play a key role in governance that's healthy development of the sustainable finance market?
Yeah, thank you. Thank you very much. Yeah, that is a difficult question. I think ultimately the advantage of having government come in is you have a set standard. So as I mentioned earlier, a lot of the innovation, the initial momentum in sustainable finance came from the private sector, demonstrated that it was workable. But the challenge that many face right now is it's hard to point to a single standard. So there are multiple standards, multiple mechanisms of measurement, multiple reporting standards. And part of, I think, the role government can play is to standardize and provide, as I said, clear guidance without necessarily impeding the innovation that's coming from the private sector. As a former regulator, again, it was very useful to us to learn from the experience of the private sector. So personally, I would not want to unduly limit the innovation, including innovation in the financial sphere, coming from the private sector. But I think there are certain areas where standardization by government and governments working together to have a global consensus, as Jonathan was implying earlier, is useful. And I think that's where many of us are focusing on right now, to provide that kind of clear guidance without being too prescriptive. I think in some instances where the impetus was to provide clear guidance and therefore prescriptive guidance, the experience has been sometimes you're not quite sure what the unintended consequences of very prescriptive regulation can be. And so a more open principles-based approach may be more practical, particularly in the initial stages. Thank you, Lee.
Thank you. Thank you for our wonderful panel discussion. Thank you for Anjali, Jonathan, Eve, and Satyam. I think we don't have much time left, and then we need to wrap up the session. I think our general view would be that sustainable finance market will be on a continue to be on a developing trend. So there would definitely be lots of more question, observation, and then please stay close to the Alliance for Green Commercial Bank. We will bring you the latest discussion and view going forward and support you becoming a green bank going forward. Thank you for joining us today, and then we'll see you next time.
Thank you.
Thank you.
Thanks, everybody.
Thanks, everyone.